Today, we will look at very special and very hidden concept that you never saw it before. In the first part, I'll talk about what is really 3-tap concept. In the second part, I'll focus on how to use the high time frames to enter a trade. In the final part, I'll be talking about low time frame entries and how to become a professional trader. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. If you love scalping and day trading or even swing trading and looking for special trading strategies, check out my free trading course. You can find the links on Google Drive or directly from my website, which is in the description. Let's talk about this hidden trading strategy that you can use especially with ranges. 3-tap concept, TT3. It is an extremely easy to use and understandable concept actually. It is nothing complicated. Now, what do you see here? Price is being rejected from the range low 3 times. It looks like a head and shoulder pattern. Now, what we look at here is actually a previous swing failure pattern that happens with a deviation of the range. It could be a pure swing failure pattern or a considerable swing failure pattern. It does not matter. What we look for is it has to hunt the liquidity and get back into range and form the deviation. Now we call this tap 1 and tap 2. The last candlestick created a hidden demand zone here. We use it for possible entry zones in the future. So once the price comes back into hidden demand, the third tap happens. This is when we shall search for long trades. Especially look for clear targets above, such as forming liquidity, imbalances, fresh supply areas. Let's check this example. You already mastered how to draw ranges, so I will skip the range part. Once you identify the range, keep your eyes on the range high and low, and try to observe the deviations and swing failure patterns. You can notice the swing failure pattern here. This green candlestick is my hidden demand area. It is giving me a future reference for finding trades. Now you can clearly see the tap 1, tap 2, and the tap 3. You can also notice the forming liquidity above, which will give you a clear target. Bearish 3-tap is exactly the same pattern. It happens at the range high area. One little note, some people try to use this strategy alone without a range, but I'm strictly against it. This strategy is like a plugin or add-on to ranges, developed for range trading mostly. Now, same order here. Price hunts a previous swing point and create swing failure or considerable swing failure pattern. This creates our tap 1 and tap 2. Then we draw a zone from the candlestick under the tap 1, our hidden supply area. When the price reaches our hidden supply area, we look for short opportunities with high or low time frames. Some people may call this strategy Quasimodo or QML. However, the difference is we do not search for a market structure break with taps. This strategy is mostly focused on range high and range low with deviations. Now let's check this bearish example. Without drawing ranges, I have to admit, charts look very noisy, very ugly and quite confusing. But with a range, it is all clear. Ranges are like magic tricks. Now you can see the range high area and a very clear swing failure pattern above. The candlestick that creates the tap 1 is also our hidden supply area. Again, the color of the candlestick does not matter. I do not care if it is red or green. What I focus on is the candlestick that creates the highest point. Now you can clearly see the tap 1, tap 2, and the tap 3. You can also notice the forming liquidity below, which will give you a clear target. How to enter a trade? There are two ways, using the high time frame or low time frame. High time frames are an easier way to trade. The problem is it is much less secure. What you do basically is looking for special candlestick patterns inside the hidden supply or demand areas. For example, pin bars, tweezer top or bottoms, a morning star, engulfing patterns, anything they do resembles a rejection. The standard stop loss for using the TT3 concept is using high or low of tap to candlestick. For your target, we generally expect the price to reach the opposite side of the range low or high. However, clear targets will be on real charts, such as liquidity or imbalance areas. Again, I do take high time frame entries. Because I am a part-time trader and I can manage my risks, I have no rush or time issues. However, if your aim is to be a full-time trader, you need to learn to combine low and high time frames. Here, once the price enters my demand area, you can see the double rejected points with large wicks, which also creates a pin bar. Furthermore, there is a nice imbalance on the left if you can notice. I could make a high time frame entry here. My stop loss would be the below of the tap to candlestick. My main target is actually the range high and the possible liquidity points around range high. Now with the bearish example, all the same concept. You can choose a very strong rejection candlestick in the hidden supply area, a very strong pin bar. But the problem is that there will be many pin bars. It is impossible to decide on a specific candlestick. This is why we place our stop loss at the tap to candlestick's high point. Another way to enter is using lower time frames. I know, many of you hate using low time frames. However, it is what it is. This is trading. More confirmations will give you better entries, better targets, and better chances. The first way of using a low time frame is finding a structure break inside the hidden supply area. That may support your entry. For the stop loss, I still consider your safest place as the tap to candlestick swing high or low. Of course, you can still find much tighter stop loss areas with low time frames, but the choice and the risk are yours. The second way of using the low time frames is looking to the left of your chart and searching for a suitable internal demand area. These could be imbalances, order blocks, breaker blocks, anything that you can identify. I still keep the tap to candlesticks low as my stop loss. Sometimes these stop losses could be quite large for me, but I do not mind. I enjoy playing it safe. Now, if you want to master trading and become a full-time trader, you must learn the combination of low and high time frames. Let's zoom in on this part and open lower time frames. First, notice the very strong market structure break on the left, and notice the imbalance inside our entry zone, which is also combined with the order block. The strongest entry point is the dragon fruit. Furthermore, do you see how liquidity is hunted first? Many others call this inducement, but I just call it a liquidity hunt. Now, this is an area where I can set an entry limit order, because it is also in the extreme discount areas. These type of entries are the only way of becoming a professional trader. Okay folks, we completed 3-tap concept. The next video will be about real trading examples of these trading strategies. As always, all these trading methods are suitable for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care, and see you soon.